Well, Japanese investors have lots to keep an eye out for today, including a key policy decision and an expected move by Prime Minister Sakae Takaichi to dissolve parliament ahead of a snap election next month. But ahead of that, we are seeing the Nikkei 225 snap its longest losing streak in a year yesterday, although today it's back underwater about 0.1%. Meantime, the yen are moving about 158.48 there. Now, super long government bonds are extending their rebound after tanking this week on fiscal concerns over the Japanese leader's plan for tax cuts and increased government spending. Now, the BOJ is caught between lending support to the weakening yen without triggering further rises in bond yields, and is widely expected to keep its rates unchanged at a 30-year high when it meets today. But the bank may hint at more hikes at future meetings and signal cautious optimism that the economy will maintain a moderate recovery that would justify raising borrowing costs further. But complicating the BOJ's efforts to normalize policy is inflation. And data out just this morning shows prices, excluding food and fuel, remain above the central bank's target rate of 2% at the end of last year, although it had slowed from last month to the lowest level in almost 4 years. And for more, we are joined by Dr. Sayuri Shirai, Professor of Economics at Keio University, and she's also a former board member at the Bank of Japan. So thanks so much for joining us today, Dr. Shirai. So BOJ, it's widely expected to hold rates today, even as the Japanese government bonds, they remain volatile and the yen continues to be weak. Why do you think the belief is that the BOJ has no need to rush into another rate hike?
Mm-hmm. So this morning we saw December national CPI data, and then, of course, it reflects energy policy cuts in gasoline. But setting aside that, the demand is so weak, so you can see underlying inflation is very low. Actually, services inflation is around 1.5%. So it's not meeting the 2% inflation target. So based on that, it's just a cost push, yen-driven inflation. So BOJ is not in a position to raise interest rate quickly. But at the same time, they try to do it because yen is, super cheap, and then they want to avoid yen to depreciate even more. So BOJ is facing dilemma. So that's why they try to, increase interest rates only moderately, slowly.
I wonder also, because this BOJ meeting coincides with the dissolution of Japan's lower house of parliament. So how much does political instability and the upcoming February election also, I suppose, restrict the BOJ's ability to move very much?
Mm-hmm. So I think they have to check what will happen to the result of February 8th general election. And there is a lot of uncertainty, about support for Prime Minister Takaichi. It's quite mixed, so we don't really know what will happen. So I think BOJ have to check what will happen to the the result. I think they have to take a wait and see attitude. And I think Takaichi recently this Monday mentioned she's willing to reduce the consumption tax against the food. And so what will happen to the bond insurance? There's a lot of uncertainty. I think this long-term, super long-term yield, hike is reflecting not only Prime Minister Takaichi's fiscal policy stance, but I think most importantly, it's very difficult for us to know what direction she's heading to. Because, a few months ago, she mentioned she focused on, responsible fiscal policy, but then all of a sudden she said, okay, she want to cut, consumption tax on food. But why she didn't do it last year? She spent a lot of money. So there is a lot of, uncertainty and lack of predictability. So that is, I think, reflected in very volatile, super long-term JGB yield.
Yeah, I mean, the 10-year yield, bond yield was trading in the range of 1.6% before Ms. Takaichi took office. It's seen climb. Ms. Takaichi is seen as a fiscal and monetary dove. How much of this kind of move is actually a no
Okay.
confidence vote in her fiscal plans, and also that proposed cut to the food consumption tax. That is set to cost 5 trillion yen a year. How significant is this for Japan's debt trajectory?
Okay, so I think this, fiscal policy, concerns will be reflected in a super long-term yield. But 10-year yield, I think it's more or less well contained because BOJ still hold, nearly 50% of long-term government bond, and the remaining maturity of government bond held by BOJ is around 7 to 8 years. So it influences the 10-year yield. So, and also there's a lot of liquidity and transaction and demand for 10-year yield from banks and insurance, sectors. So I don't really worry too much about 10-year yield because of the impact from BOJ's policy, and the market is quite deep. But, concerns on the fiscal policy will be more reflected in like 20, 30, 40-year yield.
Yeah, and Dr. Shirai, if we could just get your take on what you expect to see from the BOJ next, what should we be looking out for, the consideration, especially with the snap election in mind, the results as well?
Yeah, so today we should watch what will be inflation outlook, especially 2027. Until October, they show the inflation will reach 2%. So there might be some slowdown this year, but will pick up, in next year and 2 years after. But I think demand is so weak. I think inflation is coming down, not only because of the yen is stabilizing around 158, but demand is so weak. So let's see whether BOJ still maintain 2% inflation target. If they are going to lower, medium-term inflation outlook below 2%, it's very difficult for BOJ to explain why they still push for the interest rate hike. So there is a severe dilemma. So let's see what Governor Ueda will say at the press conference today.
All right, Dr. Sayuri Shirai, there is always good talking to you. She's Professor of Economics at Keio University and a former board member at the Bank of Japan.